Good morning, everyone. You're watching live daily market outlook for Tuesday, 8th of November 2011, prepared by Windsor Brokers. The current focus on Greece and the Greek debt problem and all this turmoil that happened in the past couple of days is now turning towards the Italy, as the Italy becomes number one story, especially for today when there'll be parliamentary voting. The Italian Prime Minister Berlusconi is now under massive pressure to resign, as some rumors yesterday actually pushed the euro higher briefly regarding his resignation. However, this was denied later on, but some comments were saying that if he didn't resign yesterday, he will do it today. Some comments were also saying that he put a message on his Facebook profile saying that he's going to fight for democracy, is not going to let the unelected government to deepen actually the Italian current debt problem. As we know, the Italian outside debt is around 120% of GDP. In actually it's 1.9 trillion euros, much higher than Greece. However, Italy is bigger and is the third economy in Eurozone, and now the bases of Eurozone are shaking, as a potential crash of Italy would seriously damage the complete structure of Eurozone. As I said, the Prime Minister Berlusconi is under high pressure to resign. He's facing a crucial vote on public finances in Parliament today, which is due at 14:30 GMT, and this actually could sink his government if enough party rebels desert him. Already some of his colleagues from the party turned the back to Berlusconi, trying to find a different and other way to handle the Italian problem. The Berlusconi denied that the reports, as I mentioned, of his resignation, and he's struggling actually to hold his center-right coalition together, but increased political uncertainty in Italy has added also the turmoil in Europe and hit the global markets yesterday. Chances of defeat in the vote seem to be receding because the center-left opposition might abstain to highlight Berlusconi's lack of support without hindering the essential ratification of 2010's public accounts. However, the opposition is preparing a subsequent no-confidence motion that could be held within days. The significant point is that yields on Italian 10-year bonds touched their highest since 1997 at 6.67% yesterday, a level seen as unsustainable for Italy's massive debt, and which could spiral out of control. This is actually one of the main risks. And as being the third biggest economy in the Eurozone, and its debt worries are a huge threat to the wider crisis facing the continent single currency. The Berlusconi's failure to adopt reforms swiftly to defuse the debt crisis has fueled dissent within his party, though estimates vary widely over how many center-right deputies will jump ship in the key vote in the lower house today. The 75-year-old Berlusconi spent the weekend trying to win back the support of enough deputies to avoid humiliating defeat in the vote, which he has already lost once. If he is defeated again, Berlusconi could either resign immediately or be ordered by President Napolitano to call a confidence vote. So these are the highlights of today that are going likely directly to impact the market, as euro remains still under pressure and the upside capped at around 138 zone, with the current movement mainly in the sideways mode. However, the overall tone is slightly turned to the negative, as mounting problems, first from Greece and then from Italy, are keeping the single currency in defensive. From the other side, the Greeks are going to decide to hear from Papandreou and opposition leader Samaras, who have they decided to act as the new prime minister for the interim period. Regardless who will be chosen, it's highly unlikely that this person will push back against austerity measures, as it would jeopardize receiving the sixth tranche of the EU aid before an important round of bond come due in the second half of December. They are basically buying time for something we have grown very familiar with when it comes to trading the euro. Taking this decision, actually, it's going to end the past few days turmoil in Greece, when the Prime Minister Papandreou came out with a shocking decision to call the voting referendum in order he wanted Greek people to vote whether they are for austerity plan or not. That triggered very strong and angry reactions from his European counterparts, as all the details about continuing the aid to Greece have already been arranged in the Eurozone summit. Now today we are going to have some very important information from Italy and from Greece, and these are likely going to be one of the main drivers of the markets today. From today's calendar, also important to mention that already released German trade balance unexpectedly jumped. That was released at 7 o'clock GMT, and showing 15 in September German exports actually jumped to 15.3 billion compared to the 12.9 billion forecast for today, and 13.8 billion August release. That should be slightly supportive for euro at this point. However, no significant action in the market seen after the release of this. Further to come, French trade balance also expected to dip further to minus 6.3 billion versus 4.3 billion in August, and minus 5.6 billion forecast for today. From UK, manufacturing production monthly due at 9:30 GMT. A slight increase by 0.2% forecasted for today versus the previous month release, minus 0.3%. And industrial production is expected to slightly decrease by 0.1% compared to 0.2% previous release. From Canada today, housing starts forecast 198,000 versus 208,000 previous release. And then we have a number of central bank officials speakers today. We have from Swiss franc governor of the board, governing board member Jordan speaking, then Bank of Canada Governor Carney speaking today at 13:05 GMT, and then late at 13:30 GMT, the SMB chairman Hildebrand having a speech, and then FOMC closer at 18:30 GMT due to have speech today. Now let's take a look on the markets and see the movements of the past 24 hours. Starting with euro, as we can see that the pair moves within the ranges. The upside was capped by 138.30 yesterday's high, and 138 yesterday's intraday high, while downside stays contained at 136.80, keeping the pair in a near-term neutral mode. However, the studies are still more I would say more turned to the downside, as the 4-hour MACD and the momentum are below their midlines. and the current break, a brief break below the main bull trend line drawn of 136.07 would signal a further reaction. A bounce higher currently underway needs to regain minimum 138, 138.30 in order to prevent immediate fall towards 136.80 or 136.55. However, the 38.2 Fibonacci retracement at 138.50 and the previous high posted on 4th of November at 138.68 are capping the upside for now, and only break above the later to improve the near-term outlook. Also, as mentioned earlier, the euro is mainly driven by fundamentals in past couple of days, so we are expecting some more action of the single currency against US dollar to be driven by today's news from Greece and the main one that comes from Italy. British pound holds the near-term, I would say, positive tone as the succession of higher lows keeps the downside protected. However, on the upside, 160.60, 160.78, the previous highs are still capping, and the only break here is to resume the recent bounce from 158.75 low of 3rd of November and expose 160.91 and 161 as the next strong barrier, above which to re-expose the previous highs at 161.64 and also the 200 days moving average on daily chart currently at 161.40. That is actually capping the bigger picture for the cable. 90 days moving average on the daily chart currently at 160.15 offers the initial support ahead of 160, which is the next support level and psychological support, while only loss of 159.45.50 stroke support zone would weaken the current tone and re-expose key supports at 159 and 158.75. Dollar yen remains within a narrow range, holding around the 78 level as last Friday's bounce, most likely on smaller interventions, as I mentioned in yesterday's session, that Bank of Japan has intervened several times from the main intervention last week, but the amounts were smaller, so there was no significant movements of the pair, except keeping it stable around 78 level, which was their initial target. 78 now offers initial support ahead of 77.75 and 77.55, which is the 50% Fibonacci retracement of the entire move from 75.56 up to 79.52, and below here actually would weaken the short-term structure and likely risk a return to the previous 2-month range between 76 and 77. However, the possible action from Bank of Japan is still pending, as they announced earlier that they will intervene at any time without any notice in order to protect their currency from further growth. On the upside, 78.25, 78.40 are initial barriers ahead of 79 and 79.52, above which to signal an extension of the recent uptrend and open 79.80, the 200 days moving average, and then 80 as a psychological barrier, and 80.23 high of 4th of August. Dollar Swiss is in a short-term positive path after breaking above previous high at 89.57 and clearing a strong psychological barrier at 90.00. Gains so far extended to 90.63, just ahead of our next targets, which are October highs at 90.81 and 91.20 posted on 11th and pardon, 20th of October. Corrective pullback now on the overbought hourly studies is underway. Initial target at initial support at 90.20, which is 20 days moving average on hourly chart, and the 90 as a psychological support is are standing there. only loss of 89.57, which is the high of 1st of November, and the low of 7th of November would soften the immediate bullish tone and allow for a stronger reversal. Commodities, starting with the crude oil. After yesterday's rally through the strong resistance at 95, the gains were extended up to 96.06, with the subsequent pullback finding support at 95.22. However, the possible further extension is not ruled out, with the key support zone at 93.50, which is the 38.2 Fibonacci retracement of the move from 89.16 up to 96.08 high, below which comes the 93.22 and the 92.85. So possible reversal is seen towards this area, but needs to be contained above, I would say, 93.50 in order to maintain the recent strong rally. And also there is a way to extend towards $100 per barrel, our next target and a strong psychological barrier. From technical point of view, we can see that bearish divergence on the 4-hour chart is now signaling a possible deeper reversal. As we can see on the MACD, the previous high did not show, the latest high did not follow the previous one, as the market hit 94.58 and then 96.08, while MACD failed to follow, and this might signal some stronger pullback to the downside. The levels on the downside that I mentioned earlier are expected to contain the pullback in order to maintain the recent leg higher from 89.16. Gold is also on a steady way higher after breaking some key points and clearing above 1752 previous high. It's approaching 1800 psychological barrier, 1797 seen so far, and the pullback on the overbought 4-hour conditions. Immediate support, previous high at 1767, and then 1758.50 zone, which is expected to contain dips in order to maintain the strong, to maintain the rally. The near-term studies are still in the positive field, and the further extension higher towards above 1800 is to open 1830 and 1885 ahead of possible retest of record high of gold at 1920 posted on 6th of September, seen in the short term. On the downside, 55 days daily moving average at 1734. Now it's underpinning the current structure, with 20 days rallying towards to break above 90 days, supporting the recent rally and maintaining the positive tone.